Are you ready to turn your investments into retirement income? Listen in as Jeremy Keil and his guests reveal ways you can make smarter retirement, investment, and tax planning decisions to achieve your ideal retirement. You will learn more about your money so you can feel better about your money and make better money decisions. Now, on to the show.
Welcome to Retirement Revealed. I'm your host, Jeremy Keil, and we're here to turn your retirement savings into a consistent income. Today, I'm joined by my producer, Eric Johnson. Eric, how are you doing today?
I am good, Jeremy. So good to be back with you.
It's going to be a fun one. Hopefully not a downer. Hopefully it'll be an uplifting one. But and we haven't practiced this yet, so I'm going to ask you a question, Eric.
I'm nervous.
Yes. Are you prepared for a 50% drop in the market?
No. That's
why we want to talk about it.
Okay. That's not good.
And we're recording this mid-May. The market today may drop through a 20% drop. It's like so right there, and a lot of people are worried about the market going down. Like they normally are worried, but of course, when you see it actually happening, it gets more worries on there. And it's interesting. I put out there on LinkedIn and Twitter and places like that. I said, "Do you remember the last time the market almost dropped 20% in 2011, 2015, 2018?" I think pretty much everyone's answer is no. Like, no, you don't remember. It seems so nerve-wracking at the time. And then later on down the road, you end up completely forgetting that there was some hiccup, that there was a bubble or a problem in the market.
Yeah.
And that's what we want to do. We're putting together a webinar. It's called, Are You Prepared for a 50% Drop in the Market? Because if that does happen, and it has happened, the market's dropped 50% twice in the last 20-some years. Like it dropped back in 2000. It dropped in 07, 08, 09. It dropped in half. And so it could happen, and yet long time down the road, you end up to where the decisions you might have made one time because of a short-term feeling will affect your long-term. We want people to do what they need to do to get through the short-term so that they can stay into the long-term investing. And having that preparation, saying, are you prepared for a 50% drop in the market? That's going to be a key thing of it.
Yeah. Okay. Well,
Yeah.
I'm looking forward to the webinar too.
Yeah, you got it. So I'll tell everyone, this webinar is June 7th. It's a Tuesday. That's 11 a.m. Central Time. And if you'd like to register, go to our website, keilfp.com/market drop. So keilfp.com/market drop. We will have a link to the webinar sign up right there. And what we're going to do today is just give you a preview, right? Hopefully you can make the webinar, but just in case, you ought to have a thought on what's going on with the webinar. We'll get you well prepared for that.
All right. Fantastic.
Yeah, so we'll just start out with one thing that's so worrisome about market drops is that it just seems so immediate, and you feel like I have to change everything. I have to get prepared for this one problem, and especially if this problem is going to affect the rest of my retirement. The issue with preparing for one problem is it's not the only problem. There's a lot of risk to your retirement. There's a lot of risk to your financial picture. We think there are 6 big risks. The first one is actually outliving your money. A lot of times it's the longevity and how long your retirement might last that is the actual biggest risk. But the market drop, that's another risk. What if the market drops? What if interest rates stay low? What if inflation becomes high? What if tax rates are changing? What if healthcare costs change? I don't know about you, Eric, but I feel like all 6 of these are maybe happening right now.
Yeah, it definitely feels like there's a lot of weight on our shoulders.
Yeah, and that's the thing is that it's always like that. And if you focus so much on one of them, and especially right now we're talking about the stock market, if you focus on one of them, you do things that could harm you when the other risks come into play, right? If you decide that I'm going to be completely done with the stock market, and then you go into low interest bank accounts, well, now inflation and outliving your money and low interest rates are affecting you. I'm so concerned about what's going to happen with the next president or the next Congress. So I'm going to do all these things with my taxes. And then what you thought would happen didn't happen. And you ended up hurting yourself because you made these market moves or tax moves that did not come to fruition. So the goal of a well-balanced retirement plan is to make sure you're taken care of and being ready for all 6 of those big risks, which is outliving your money. What if the market drops? Low interest rates, high inflation, the tax changes that could occur, and healthcare changes. So just don't forget that it's just one of those big 6 risks.
Yeah. Well, I mean, you've been talking about planning for almost a little over 90 podcasts. I think you're at right now.
Yeah,
so,
we're right up around the 90s. Yeah, hitting 100 soon. We're hoping to have a nice, fun guest for number 100. Celebrate that somehow. Right?
Absolutely.
Yeah. So in general, if you're worried about the market dropping, you need to follow a plan. And we've got a 5-step retirement plan. You can go to 5stepretirementplan.com to see our videos, a free video course to learn more about that. We'll talk specifically about the 5-step retirement plan when we go through the webinar. Again, that's June 7th, Tuesday at 11 a.m. And go to keilfp.com/market drop to register. But parts of our 5-step retirement plan, I just want to bring it up right now. It's not just about the money you have set aside for later. It's also the money you have set aside for right now. You've probably gone through life thinking I'm investing for the long term, and then you hit retirement and realize I also have a short term. And you can't have long-term money that you need to take out next week. That's not long-term money anymore. You also need to have short-term money. And if you're concerned about the stock market, you need to have both short-term money and long-term money. If you have short-term money and the market drops, you know exactly where to go to rely on it. I'm thinking of somebody a few years back, right, 2020, and they said, oh my goodness, what if the market keeps on going down? And we kept telling them, well, do you even need this money? Well, no, what if? I said, okay, let's go through and try to find the different places you can have short-term money. And thankfully, we'd done some planning with them. They did have short-term money. That having the short-term money available when the market drops allows you to take that long-term perspective on your long-term money. You don't have to feel like it's a daily issue of what if the market drops today, I have to sell some of my stocks today. Because if you need money today, you have money that's already set aside, wherever you set it aside, bank type money, interest rate type of money. So that's an issue, is that a lot of people look at their investments and they either don't have the right amount of money set aside for the short term, or they think of it like one pot of money and just everything's going down at once. Think of it at the minimum of kind of 2 pots of money. You got your short-term money, your long-term money, and the market's going down. Make sure you keep an eye on that. Say, this is the long-term money. I'm ready for later on. I have the short-term money. If I do truly need money right now, then you know where to go.
Yeah.
So we'll find out when you're listening to this, maybe 2 weeks later, and on the webinar just a week later, where the market will be, if it will be up or down, because it could change on a daily basis. But let's just assume it is down. We want you to take advantage of 3 things. Just if you're wondering, the market's down, I didn't do the planning ahead of time, what should I be doing right now? There's 3 focus areas. The first one is to take advantage of your tax situation, right? If the market's down, the things that maybe you would have sold at a higher tax situation, right? Because you have a basis, a capital gain, these things that are in there. Well, if it's down, the taxes are likely less. So this might be an advantage for you to change your portfolio around, rebalance your portfolio. The taxes are likely going to be less. Or you might have thought about Roth conversions, where you prefer to have your money in the Roth IRA. Now it's in a traditional IRA. If you were to move the money at a down point from traditional to Roth, hopefully when it comes back up, it'll now be in the Roth. It will be growing back up in the tax-free area. So take advantage of that tax situation when the market's down. And it's always a good time to make sure you have the right level of risk. That's the second piece of it. Whether the market's up or down, always make sure you have the right level of risk. And that's something we encourage people to do well ahead of time. I remember back in the fall of 2019, someone we were talking to, they had a very low risk tolerance. The idea that they just did not want to see the market go up or down. And they also were retiring soon. So we evaluate things with them and looked at their existing accounts that they had with another advisor. Turns out they had more like 80 or 85% in the stock market. That's more on the riskier side. And so is the fall of 2019. We weren't predicting that the market would drop in any ways. We just said, you have the wrong level of risk. We brought their risk level down to closer to 40% in the stock market, basically dropped their risk area in half. And then who would have predicted that a few months later, COVID hits and the market drops by 30%, at that point in time. They called me up. They were very worried, saying, oh my goodness, the market's dropping. What should we do? Well, guess what? You have short-term money now, and your long-term money has a lower risk profile than before. You're going to do a lot better. Thank goodness we met, and thank goodness we took that opportunity to evaluate the risk level that you're at. I'm thinking of another person in March of 2020, and years before we had worked with them, and they said, I'm very, very nervous about the market. And we looked at things and said, well, there's another term called risk capacity. You actually have the ability to take on more risk. If the market drops, it's not really going to affect you that much. And because of that, you have an extra capacity, extra ability to take on more risk. And of course, the market's going up and up and up. And they somewhat agreed. Well, then the market drops 30%. And they call me up and say, remember that idea that you said about we actually could take on more risk? Is now a good time? Well, yeah, the market was down 30%. That was the perfect time for them to get to the right level of risk. They were actually kind of under where they were, and we were able to adjust them up and get them to the right level of risk. So you should always evaluate the level of risk you want to have and the level of risk you can afford to take, and then see where you are. And if the market's down, just double check. It might just confirm, like, okay, I'm good to go, because I do have the right level of risk. I have this balance between short-term and long-term. I'm good to go there.
Yeah, and at the end of the podcast, I know that you definitely have given out contact information before. I want to make sure you do that again, because your first example, you were looking over another person's work or another person's lack of work, right?
I suppose, right? Yeah.
Yeah. I mean, just let's be honest, a second opinion is always good.
Yep, you got it. I like that. So I'll do this right now. I'm going to add on to that website. When you go to keilfp.com/market drop, we'll put in a contact us. So it'll be really easy. Just send us a question. Happy to get a hold of you. So keilfp.com/market drop. You can register for the webinar, which is June 7th at 11 a.m. Central Time, or send us a question. Happy to answer any questions you have. It's Jeremy Keil here, and I know you're listening to the Retirement Reveal podcast because you want to learn more about making great retirement decisions. I've created a free video course for you to do just that. Head over to 5stepretirementplan.com and sign up to receive this video training right in your email inbox. We broke down our 5-step retirement plan into bite-sized videos so you can get started on the retirement, investment, and tax planning you need to create a consistent retirement income. Go to 5stepretirementplan.com, use the number or spell it out. You'll get there either way. 5stepretirementplan.com. Thanks for listening, and now for the rest of the show. Well, the final focus area is to make sure you do have enough short-term cash. We talked about that in the whole planning, but oh my goodness, what if the market's down and you need cash today? Well, the first thing I want you to think of is, do you really need to sell those particular stocks and funds today? Like, do you really need to sell everything? Take a look at your budget. Take a look at when you need money, and you'd be surprised. Like, it's not too often that somebody calls us up and says, I need 50 grand tomorrow or my house is gone. Like, I don't think that's ever happened. When people say, what if I need the money, they are more in the what if camp than the actual I need the money camp. So let's go through, if you're worried about the market being down right now, think about, when do you really need that money? Do you really need to sell those particular stocks and funds today? If you look at your account, you might see that there's portions that are down 30%. You might see there's portions that are down 20%. There might be even portions that are flat or up. So when you go into your account, a good advisor should be able to help you say, okay, yes, all right, fine, you maybe do need some money. How much money do you have? Let's take a look and let's sell and take from the places that are even or maybe up or maybe not down that much. You don't need to sell everything and go sell the things that are at a sale. When you are in the market, you want to buy the things on sale, not sell the things on sale. And you should be able to go through your investments and have many different parts of that investment account so you can sell the right funds. That's one part of it. Another part is, do you have access to other funds? Yes, you need 5 or 10 or 20 grand today, but do you have 5 or 10 or 20 grand in the bank already? Or an existing home equity line of credit? Or cash value life insurance? All those areas you should be able to get money out of, and you're not selling anything in the stock market. You're not selling things when you're down. You would be surprised when you start adding things up of, what else do you have available? you can even find ways to raise cash without selling your stocks. You might just need to cut your expenses a bit. And while it might not be fun, but it's not nearly as harmful as selling something when it's 20 or 30 or 50% down. There's also a common thing that's happening with your investments is in your accounts, you probably have all the dividends that happen, like the interest and dividends, you probably have it set to something called reinvest, where that's usually a good thing, where you're buying just on a consistent basis. The company paid out a dividend and you go buy more stocks of the dividend, more stocks of that company automatically. Well, you can switch it so that dividend does not get reinvested. It just builds up in cash. And next thing you know, 1 or 2 or 3% of the money that you have in your account might be available because it's naturally coming out to you as cash. So there's so many ways that you can go through to make sure you actually do have the short-term cash when you need it without selling in the stock market.
Yeah. I mean, we've seen seasons. I mean, you named a bunch of different years, the stock market dropped 20%. And I think that if people kind of think of it that way, or this is kind of how my wife and I've thought about it, is that there may be a season where we need to tighten the belt a little bit to make whatever goal we have. Like we wanted to take a little bit more expensive vacation than we normally did, so we tightened our belt for about 8 months to make sure that vacation was exactly what we wanted. And I think that it applies to anything when you need extra cash. There may be a season where you tighten it down a little bit, or you consult somebody like yourself where you can say, okay, what's the best place to drum up cash? I'm tightening the belt a little bit, but I also want a little bit more. So let's look at that and find the best place that's not going to affect you for that next season of possible gain.
You got it. And that's why we want you to have a plan. Have a plan ahead of time. And if you don't already have that plan and the market's down and you're feeling the heat of what am I going to do, there's other things that you can do besides just sell everything. And that's exactly what we're going to be talking about. We want you coming out of this podcast today to feel like you're prepared for a 50% drop in the market. We don't think or predict that it will happen. It's just that you ought to be prepared for something like that. And if you'd like to learn more, go to our website, keilfp.com/market drop. That webinar is June 7th at 11 a.m. Central Time. And you could also send us a message. So love to see you on the webinar.
All right. This is fantastic. I'm excited.
Yeah, we'll see you there too, Eric. And thank you for listening to the Retirement Revealed podcast. We believe if you know more about your money, you will feel better about your money and you will make better money decisions.
Thank you for listening to the Retirement Revealed podcast. Click on the subscribe button below to be notified when new episodes become available. Visit retirement-revealed.com to learn more. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Keil Financial Partners. Keil Financial Partners does not provide legal, accounting, or tax advice. Consult your attorney or tax professional. Representatives have general knowledge of the Social Security tenets. For complete details on your situation, contact the Social Security Administration. Keil Financial Partners is a part of the Thrivent Advisor Network, a registered investment advisor. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.